We know that so-called ESG investing, environmental, social, and governance, has become something of a sore point in the United States. Some U.S. states have apparently moved to penalize investment managers, taking business away from them, for example, who emphasize ESG. Morningstar has been looking at the trends in this area, and it found that nearly half, well, more than 40% of assets held globally by large funds do take ESG into account, and that figure is rising, especially here in Canada. We are joined by Thomas Koo, who is head of ESG strategy at Morningstar Indexes. It's great to see you.
Thank you very much. I'm pleased to be here.
So ESG, we're talking about environmental, social, and governance here. I mean, environmental is of most interest to us here on the Commodity Show, but you're talking about the broad ESG framework here.
We're talking about the broad ESG framework, but one of the things that's interesting is that when you drill down into the E, the S, and the G, climate is king. So the environmental pillar is of most interest to asset owners. We did a survey of 500 global asset owners, 200 from Europe, 200 from Asia Pacific, and 100 from North America, including 50 from Canada. And what we found was that ESG, in their minds, has become more material over the past 5 years for 2/3 of them. So it is something that's top of mind for them. And when you drill down into the E, the S, and the G, environment stands out, and then within that, climate is the most important issue.
So Europe leading the way here, and North America something of a laggard.
Something of a laggard, indeed, although the perspective in Canada really stands in contrast to that of the U.S. In particular, I'm thinking about the fact that, again, going to that materiality question, has ESG become more material in the past 5 years? What they say in Canada is that a third of the asset owners said that it had become more material, much more material in the past 5 years, and that's in contrast to less than 15% the previous year. So in other words, ESG has gone way up in terms of materiality, and it's also in contrast to a much lower number for the U.S., around 10%.
Why are some money managers taking this more seriously?
Well, I think money managers do what asset owners tell them to do. And so I think it depends who you're doing business with. And again, we were talking to pension funds, foundations and endowments, sovereign wealth funds, insurance, general accounts, and so on. And I think because they're very long-term investors, they have a long time horizon and a stake in sort of a good future for their beneficiaries. They have a strong interest in these issues.
It's such a complex area. I know that there have been some surveys done of consumers, and apparently a lot of consumers are not willing to pay more for greener products. Some are, but a lot aren't.
Yeah. Well, they shouldn't have to pay more. That is to say, what you're paying for with an investment is to get risk-adjusted returns that are competitive with whatever asset class you're investing in. So they shouldn't have to pay more. But what is true is that the flows, for example, into sustainability funds in the U.S. Have flatlined basically. In the recent, in the past year or so, and I think it does have something to do with the challenges that have been put up to ESG investing in that country. But I think things are different in Canada, in the sense that Canadian pension funds have often been, I would say, leaders in the in this area, and I think it comes from the fact that this is a natural resource-based economy. And so environmental issues have been top of mind here before they were in the U.S. And I also think that because so many of these issues intersect with First Nations issues and human rights that some of the social issues have also sort of risen up the scale to be of importance to Canadian asset owners.
Thomas, thank you very much for joining us.
My pleasure.
Thomas Koo, head of